Welcome to Sales, Tax, and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, Mike Fleming here. I am the founder of Sales, Tax, and More, and today's host for the Sales, Tax, and More podcast, where we talk about everyone's favorite subject, which is, of course, sales tax.
It is everyone's.
Yeah, absolutely. And I've got Jeremy Weiss. That was him chiming in there. And he's done thousands of interviews with successful entrepreneurs, CEOs. But today we're going to flip the script. We're going to have him interview me.
Michael, thank you for having me. A brief introduction for you. Michael Fleming, if you don't know him, I consider, and a lot of people consider him, one of the USA's leading authorities when it comes to sales tax. And the episode is brought to you by Sales Tax and More. They assist companies and their trusted advisors with their sales tax needs. So they offer consulting and research, registrations, returns, and much more. And over the years, they've assisted thousands and thousands of sellers, both foreign and domestic, with their sales tax issues in the United States and Canada. You can go to salestaxandmore.com for more information and check out past episodes. They're really interesting, some interesting case studies. And today we are going to talk about the number one cause for large audit assessment. And what would that be, Michael? Tell me about that.
Okay, so for companies that have a responsibility to collect resale certificates or other types of exemption certificates, missing or invalid certificates is the leading cause of large audit assessments. And the reason is simple. Number one, if a sale is not properly documented, a sale for resale is not properly documented, then the state doesn't recognize it as a sale for resale. So you're thinking that you have all of these sales that, you don't need to be collecting tax on, but you're not properly documenting them, and you get audited, and the state says, okay, you owe tax on all of these transactions.
Why are they missing them?
Lots of reasons. Sometimes it's just, not understanding where they need to collect them, or even if they do collect them, maybe it's not completely filled out, maybe it's not signed, maybe it's not dated, maybe it's on the wrong state form. So it's just a lack of knowledge as to what they should be accepting. And for some companies, it's not just accepting it, but someone's got to validate it, make sure that it's actually something that would survive an audit.
So walk me through an example, because some people, obviously they're missing and people are doing this wrong. They don't even realize they're doing it wrong. Walk me through an example, and you could de-identify whether it's like a grocery store or a practitioner's office, of the type of business they are, what they were selling, and what they should have been doing that they weren't.
Yeah, I've got a good example here, how even one missing certificate can impact you greatly. This was a company I was involved with a number of years back, and they were building highways, of all things. So you wouldn't normally think that they had a lot of certificates.
No.
But they were selling off old pieces of equipment and lots of things that they no longer needed. So they got audited by the state of Texas. It was about a $3.5 million audit, and a good chunk of that was due to missing certificates. Another part, was use tax. And use tax is the second leading cause. We can talk about that in another podcast. But the certificates, the state of Texas, gives you 60 days to go out and correct any mistakes. And we were able to find all of the certificates except for one. We were calling companies. We worked overtime to get these certificates. We were extremely successful. And we were real good. We found some refunds, put them inside of the audit. We took care of some of the use tax issues, and we got this audit down to a ridiculously low number from $3.5 million, except for this one certificate. And we couldn't find them anywhere. We did skip tracing. The company looked all over for them. It was an individual, and they had sold a piece of earth moving equipment to them. and the tax on it should have been about $8,000. And no one wants to pay $8,000. But after we exhausted all of our efforts, we tried to get this one certificate excluded from the sample. And by the way, that's important. You got to remember that $8,000 doesn't represent just $8,000, because most audits nowadays are done on a sample basis. So that affects your error percentage, and it's, put out over the entire population. So that $8,000 actually was a $270,000 error. And that's what they had to add to the final audit assessment for that one missing certificate. Wow. So, we couldn't get it, excluded from the sample because we'd used up all of our favors in this audit, and they had enough issues that they just wouldn't do it. So where they went from paying virtually nothing, they were extremely happy with us, by the way. We got them down from 3.5 million. But that one missing certificate, $270,000.
So to prevent that, Michael, in the future, going forward, just anything that you purchase, you ask for the resale certificate? Is that?
Anything that you sell to someone who's selling for resale. Hey, put it this way. All of your sales, remember that if you have a nexus in a state, you need to collect the tax. And if you're not going to collect the tax, you need to collect some sort of exemption certificate in lieu of the tax. And a resale certificate is a type of an exemption certificate. So you need to get that from all of your customers, not on every transaction. If they're giving you blanket certificates, that's okay, so long as they're continuously doing business with you. I mean, you should update them as a best practice every 3 or 4 years. But the important thing is making sure it's completely filled out, making sure it's signed, making sure it's dated, making sure it's on the correct state form. Those are some of the bigger issues out there. I mean, a lot of times an auditor will kick it simply because it's not signed. How hard is it to have someone, when you're collecting this certificate, validating it, make sure it's signed? I mean, just make sure that all of the questions on there are completely filled out.
Anything else that people should know about the exemption certificates?
Yeah, I mentioned as a best practice, most of the time exemption certificates don't have an expiration. They don't expire. There are a few states where they do, like Florida or Washington. But in general, they don't expire. However, a lot can happen in a 3 or 4 year period. And maybe that certificate was valid when they issued it to you, but maybe the company sold, or maybe they, changed entity types, and now they have a new sales tax number. Maybe they changed states. I had a situation where that happened. And the old certificate was on file. They moved from Texas to Oklahoma, and that Texas certificate didn't work anymore because everything was being shipped to Oklahoma. So certificates may be valid when you collect them, but a lot of things can happen in a 3 to 4 year period. You want to be spot checking or doing a total upgrade, or at least every 3 to 4 years when it comes to certificates.
Do you recommend like a business put that in their procedures or something, like every 3 years, check these specific exemption certificates? Or what do you recommend going forward for a company like this who kind of got burnt by it?
Yeah, absolutely. Number one, you have to have a process. And, part of that process is who's responsible for making sure the certificates get collected. Sometimes it's the credit department. Sometimes it's the accounting department. Sometimes it's the sales department. But someone's got to take responsibility for collecting the certificates. And then someone's got to be responsible for validating the certificates, making sure that they're completely filled out. And then as part of your policies and procedures, have them updated every 3 to 4 years.
Thank you, Michael. So anyone who's interested, go to salestaxandmore.com, listen to more episodes. I mean, if you're like me, like, what the heck is he talking about with exemptions? Because you probably should have him audit, or the company audit your account before someone who you don't want auditing your account to do it, and have them go through and see what you're missing, what you need, I imagine. I don't even, so check out salestaxandmore.com for more information. Michael, thank you. This is too much to know. This is so much. So thanks for sharing it.
Well, thank you. Yeah. And thank you for being with us, Jeremy.
Yeah.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.